Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Wednesday, December 18th, 2024. It's 4:02 p.m. Eastern Time, so the market's just closed. We do have the Fed meeting, of course, out of the way. I usually don't comment on the initial reaction at 2 p.m. or even the press conference at 2:30. That's now over as well. And so the market's had plenty of time to digest. Pretty much it's been nothing but red sticks since the 2 p.m. rate cut. And here you can see what QQQ did. 2 p.m. right here, they cut. This is where Powell got on, started talking during the press conference. Market didn't like what he was selling, and so you can see what happened today. So I'm just going to go over all the key levels and developments to watch for going forward. So that has brought us down right to my beloved uptrend line off the August 5th lows. If you've been, unless you're brand new to the site or a subscriber and you're just catching up and haven't checked in quite a while, I've been talking about this one nearly on a daily basis recently. Is a very significant uptrend line, and it's no coincidence that's where we parked today on the big drop. We closed right pretty much on it. So this is what it looks like on a daily chart. This is my what I call clean board. You remember you have a big divergent high. That was our, so we had a breakdown of the minor trend line today. You could see that also on the 60-minute chart right here. There was a breakdown on the minor trend line, took us down to the primary trend line there. And being that we've had this big divergence building for quite some time, still very much intact. You can see here my negative divergence right there as I clean this up a little bit. Just want to expand it. Kind of looks flattened out when you're zoomed in when I squish these indicators. Big negative divergence, which tells me whether it breaks tomorrow or 2 weeks or 3 months from now, that trend line is going to break sooner or later. And it's really ripe for a breakdown. By that, I mean, you can look at this forms a wedge pattern here, bearish rising wedge. And those wedges typically break about 70 to 80% of the apex of the wedge. The apex is where the two lines converge. That would be to the right of the chart there. So it's in that sweet spot now. And let me go over the rest of the charts and show you what to do. And if again, unless you're just catching up or new to the site, these are still the long-term targets I laid out back in late June. Peaked right here, just before. Actually, it was a week or two before the market peaked. I think it was July 10th. Give a market top range, which we went slightly above, relatively speaking. Again, relative is everything. Relative is, you might say 2, 3, 5% is not slight. It is slight when you're looking for a call of a drop of about 50%, which I still am. So you're talking a fraction, small 1% of that, if that. And we're back to the top of the market zone there. And more importantly, much more importantly, this is that key trend line. You can see it here on the weekly chart. It shows very well. I'm circling all the reactions. We parked on it again. Now, today's Wednesday, 2 more days left in the trading week. So if you want a high probability sell signal, you wait for a weekly close. And as I like to say, the redder the better. In fact, I should zoom in there. It would be this candle. This is this week's candle. This week's candle, if we rally up and close up here on Friday at 5 p.m., it'll turn green. If we end up closing down here, it's going to be a big, massive red, bearish engulfing candle. You don't get those often on the weekly chart. When you do, they are very nice to trade. I love trading bearish engulfing candles because they're so simple. The RR is phenomenal. So again, you have from where we closed today, I'm just going to, I have to leave the lines on to measure it for you. I'm going to drag down. So you have, again, well, there it is. Still 50% drop. And if you were to, let's just say, again, it finalizes, you put a stop over the high of the candle. Now you could use a body. I like to put over the top of the candle. So that would be, again, depending where we close. Right now it's only about 4.5% above where we are, and so you're risking. Let's just say that we close down here and it goes down another 3%. So let's say you're risking then 7% to make 50. Yeah, I like that. That's an excellent RR, a tremendous RR. About better than 7-to-1 RR risk reward ratio, meaning you're risking $1 to make $7. And again, maybe it plays out, maybe it doesn't. Anytime you take a counter trend trade, by definition, the odds of it playing out are going to be lower than a trade that's aligned with the trend. However, I always factor that in. If the risk reward ratio is above average and you're risking a relatively small amount, then that offsets the lower chance of probability. However, I also don't base, if you just say, oh, you're in an uptrend, that's one thing, and to take a shot on a trade. But there's a lot of evidence that this uptrend is, and not just in the charts, not just in the divergence, but also in the abysmal market breadth recently, the internals and everything else. All right, let me go a little faster and show you what else I'm watching. So during the trading session, immediately after the rate cut, in addition to the markets and not just QQQ, I have probably over 50 streaming charts between all the monitors here on my desk. It's like a movie theater in here. And I watch, of course, the S&P. I watch the VIX. I watch all Mag 8, 10 stocks are up there streaming charts at any one time. But I also very closely watch Treasury bonds. The smartest of smart money in the market, they trade and watch Treasury bonds. Treasury bonds are often a tell for the stock market. These are the high level people, a lot of them above my pay grade. When was the last time you went to a cocktail party and and the conversation starts talking, you're talking about trading the long bond. Most people don't. They want to talk about Apple and Nvidia and QQQ and the S&P 500 and Bitcoin, right? So just know that, and that's we're going to talk about that a little bit because that's, to me, very, very, very important. So here's TLT, the 30-year. Let's just go to TNX. That's the one that the market watches most closely. TNX is the yield on the 30-year bond. And you can see 2 p.m. today, this is just a 1-minute chart. There was the rate cut right there. The yields never look back. Remember, Powell lowered rates. This is the actual yield on the 10-year, not the price. And once again, it went the other way, indicating the Fed has has clearly lost control on the long end of the curve. Here we go. I've shared this chart with you. So this was the first cut in the cycle right here, September 18th, a 50 basis point cut. Remember, 50 basis point was an oversized cut. It's rare. 50 basis point cuts are usually reserved for times of financial crisis and duress, market duress. And so that's what the Fed let it off. And instead of rates going down like most thought would happen, we saw the exact opposite happen. Was no surprise. We had long side targets there. It was a long trade idea. I expected rates to go up based on the technicals, not on the expectation the Fed was going to cut. The chart said long-term rates were likely head up based on the divergence, the breakout. We had it on IEF, or no, I'm sorry, TLT was our trading proxy then. Yeah, the long bond. So we went up. Then they cut again right here. We went up again after the next 25 basis point cut. And then today, once again, one day doesn't make a trend, but what did happen today, and this is very important, I want to point out, unless this gets reversed, unless this is just a little post-FOMC whipsaw, this is the primary downtrend line here for TNX, the 10-year yield. Very important. However, some people, we all see different things. I see that trend line. I think it's important. But other folks, a lot of traders are going to be looking at this recent high right here, the pivot high. And this is right here. So when we take that out, those that don't see the trend line will almost certainly see that. Then you have just a few more reaction highs. And if and as each of these reaction highs are taken out, and the more you get away from this trend line, that's almost certainly going to be bearish for the stock market. In fact, if you recall earlier in the year, I laid out on the 60-minute chart of IEF, I color-coded it, made it very simple with these zones. And I'm just going to highlight it here. The chart's gotten a little busy since. I had a green zone here, which says net bullish for the stock market. Yellow zone. Remember, I just flipped it upside down. This is IEF, the 10-year Treasury bond ETF. So when it goes down, it means rates are going up. So yellow zone, stock market would start to take note of rising yields. Orange zone, which we've clearly entered today, stock market really starts to take notes of rising yields. I'd say a 3%, actually the futures right now, In after hours, I'm looking over are down 4.12 on the day. So over 4% drop as we go into the after hour session on QQQ. So yeah, and remember, we punched through. We took out that previous low right there on IEF today. So, and that's clearly taken us in the orange zone. Then I gave you back then, which we never entered at the time, the red zone, where so far, again, I think it's safe to say the stock market took note today. Doesn't matter what Powell said. The bond market heard what it wanted to hear and did what it did, and that's why the stock market's down. Because again, Powell cut rates, and instead of the rates that matter to the banks, remember, you and I do not borrow at the federal funds rate. That's what Powell cut, the federal funds rate. It's an overnight lending rate, one-day rate. You and I borrow if you need money, you want to get a mortgage on a house, 30-year mortgage, you want to go get a loan on a car, a boat, business loan. Those are going to be long-term rates, generally around the 10, roughly benchmark to the 10-year Treasury. And so that's what happened, and that's why. So what I said back then is any advance, well, there's a caveat here. So I expect this to most likely continue down. But more so, I want to say, watch it. If it does continue down, especially down towards the bottom of the orange zone and especially into my red zone, I view that as nothing but bearish for the stock market. Maybe I'll prove to be wrong, but I see no alternative as that being anything but bearish. And again, get down here. When I say it, I mean it. The stock market would probably start to freak out if we get down into, and especially down towards the bottom of my red zone. However, this can go two ways, because as I said back then, what you're seeing today is the market saying that they worries about there's various factors that make long-term rates go up. Obviously, again, the Fed has lost control. I don't think that was addressed. There was one quasi, question addressed towards that. I'll maybe comment on that later, where somebody asked something about long-term rates going up, but nobody directly. I didn't listen to every word. I listened to most of the press conference. I had to do a few things during it, but I never heard anybody really grill Powell on, how, hey, has the Fed lost control along end of the curve, and what's that going to mean to the economy? It's really, let's just talk a little bit more about rates. So if we reverse here and bonds start going up anytime soon, especially need to soon, because if we keep going down, it's not going to be good. That could be bullish for the stock market, especially if it's an organic or natural reversal in rates. However, if we solidly take out the uptrend lines and the support levels I'm about to get to in this video. It's not only about QQQ. QQQ is important. NVIDIA is very important to me. Apple, the S&P 500 is still important. So if we break those next support levels that I'm about to cover, then you will most likely see at some point rates going up. Rates going down with bond prices going up due to a flight to safety bid. And I talked about that before. And that would be not necessarily bullish. The stock market, in other words, if the stock market starts to really go down hard, an impulsive sell-off or a crash or anything in between, then you would expect at some point a flight to safety bid. And what that is institutions, think of your big pension funds, they start selling stocks because they got a lot of them right now. They've got a lot of NVIDIA, a lot of big Mag 8 stocks, 10. They're going to sell them and they're going to move money into treasuries because they have to. They have to protect their future liabilities, those pension plans. So institutions will move into treasuries. So if you see it for that reason, that's not necessarily bullish for the stock market, is what I wanted to say. So again, I see no other alternative as bearish for the stock market. If yields start to go up, I think it would take a little bit more. This market's been resilient. I think we're going to have to push yields down a little more to really clearly break the market down and start that impulsive selling. We're not there yet, guys, but we're close. So I'm going to go over those levels now. So either way, keep an eye on Treasury bonds. There's TLT, 30-year bond also took out the recent lows right there. And that's where we're at today. And then I already gave you TNX, I believe. Yes, I did. TNX, the yield. Yep. All right, we did that. And just for kicks and giggles, here's the 30-year yield, TYX. You can see this is the primary downtrend line here. The benefit of the doubt trend line comes off the highs in 2023. And if we pop that and we pop this previous reaction high, that's going to be bullish for yields, which is bearish for bonds, which is bearish for the stock market. Remember, rising yields, stock market will not like. All right, let's move on to all the levels to watch on the stock market. Let me do the indexes real quick. QQQ. Let me just look at the simple clean board. We closed right on my the primary uptrend line off the August 5th lows right there. And so I do think it will go. It could go tomorrow. I favor going tomorrow or Friday this week, no later than next week. Maybe one last hurrah. All I can tell you is if you didn't do anything today, what do you do right now and after hours? Do you take a trade? No, all I can tell you, we're at support. It's a support level I think will break. I think a breakdown is imminent for the reasons I've stated. The very poor market internals. We've seen a lot of other sectors and stocks rolling over. Only a handful of stocks holding it up. The divergences, we're ripe for a breakdown here. However, support is support until less broken. So this will be to be continued tomorrow. Tremendous amount of hot air in the market. I've commented on the fact that there's a lot of complacency right now, as there is usually when the stock market's at all-time high and appears resilient. And again, it's a false guise of strength. And I showed you that yesterday, looking at the S&P and the Dow heading south steadily lately, and yet NASDAQ 100 acting like nothing was wrong. And that's where most people are trading now. They're trading the big tech stocks. So there's that. But here, let me get to the other indexes. So here's SPY. Let me give you, this is my board right here. SPY did take out today in one fell swoop the trend line off the August 5th lows. I don't have as many clean reactions, so I'm not, that's why I've been harping on the QQQ. See, with SPY, I only have one and a cluster there, two, and we went down through it today. And we closed right on support. These are the levels I believe I gave you yesterday and recently. 584, 50-ish. It was an all-time highs right there. We made a breakout, successfully back-tested it. Now we back-tested again today at the close. So this is a level. Again, tomorrow, if we go much below, especially if we close much below, and even better if we close Friday much below today's lows, because that will then give us weekly candlestick sell signals. We go out to the weekly charts. I have the same trend lines. And this is it here on SPY. QQQ. Oh, that's SPY. I'm sorry. QQQ. I already had it there. I want to see those trend line goes. This is the one off the August 5th lows. So I'll be looking for that. That's one thing I'll be looking for. If we break it tomorrow, we could go down pretty quick. And let me just show you everything else to watch. Hold on. Let me go to SPY. I covered that. Price support there on the 60-minute chart. Remember, SPY already broke down. Or was it last week? I think it was. I gave you sell signals. I gave you the breakdown in SPY. NVIDIA took out its uptrend line. SPY backtested, went sideways as I covered yesterday. And then yesterday I said it needed to break 643. That would trigger a sell signal. And it sure did. So you could have jumped in early today, taken that sell signal, had the biggest one-day drop in SPY in a long time. 3% right through that first target there. And, don't go straight to jail. Don't pass go. Don't collect $200, right? Just like Monopoly. It blew right past that first target I had at a support level of 593 and parked right on my second one, which is even a better level. Again, I showed it to you on the daily. That was a previous high, breakout to new all-time highs, successful backtest of that level right there now. Big level. Bulls should be coming in with both fists buying right now. If they don't, then that's bearish. And then then you just look at the next levels, so forth, so on. I'm still targeting another run back to the 200 days, but we'll see. So those are levels to watch. So far, it's very simple. A solid break, especially close tomorrow, and even better, a close Friday below today's lows. That's simple on QQQ and SPY. IWM, somebody asked yesterday for an update, and I gave you this chart today. Here's your primary uptrend line. Let me make it more visible here. Make it nice and thick. There it is. We were here today. I said these yellow levels would trigger a sell signal. I got this chart out to you this morning. And when they went, took out the trend line, then took out that BOD, or what I call benefit of the doubt, secondary support just below 226.72, straight down to the primary uptrend line. So there it is, guys. This is not mere coincidence. I see this a lot. These are the three big indexes I follow. S&P 500 via SPY, NASDAQ 100 via QQQ, and IWM. All of them closed on significant support levels, key support levels identified in advance, and that's it. So to be continued tomorrow. Levels that I do believe will break down sooner than later, whether or not we get one last hurrah off. Levels that when they do break will trigger the next sell signal or objective short entry or add-on if you're already short. All right, let's look at the equal weighteds. RSP, the equal weighted S&P 500, broke down and closed just below that 176. This was its comparable level on SPY. It had an all-time high there, broke out, back tested it for a while, went up, back tested it again, and today it took it out. Oh, of course, the sell signal came on the break of that trend line first, and then QQQE, equal weighted QQQ, clearly has broken down below that bearish rising wedge. I believe I covered as recently as yesterday with you right there, and that's a sell signal right there. There's some minor support here. And again, it's just, the main indexes have to break down. And if they do, that should then open the doors to some of the deeper targets. Let's look at the VIX. I gave you VIXY. The VIX itself, spot VIX, was up big today, but I get this question put to me all the time, so I'm going to get in front of it today. The VIX, I showed you on the 60-minute chart recently, and I gave you this exact chart. I haven't touched these levels. This one, 2384. And that would have been in videos. I just paused the video to check to see if I had a static chart, but you'll see that in recent videos. And boom, that was hit. That was a very well-defined level. A divergent low there, divergent low there, divergent low here. 372% pop, 61%, 55%, and today alone, just today, we're up 52%. The breakout occurred right there, so we were already on a buy signal on the VIX, coming off that divergent low. And so now what I wanted to get in front of is, if you're wondering, because I get this put to me all the time, Randy, why is my VXY or my VIX futures only up 17% today and the VIX was up 50? You can't trade the VIX. The VIX volatility index, the VIX volatility index you can trade it via futures that track it, and you can go with the different, just like on the stock, you can have short-term, near-term futures. You can go out a couple months. You can buy whatever you want. You can buy right now I think the December stopped trading just recently. You can buy the Januaries, you can buy the Februaries, the March. And so this one trades the near-term futures, and it actually did better than the VIX midterm futures ETF. So we were in the right one, but that's how it worked. So the futures or this ETF, and look at that perfect hit of my 50-54 target, which was a big, big level. So, if you took it and you don't think this is a one-day wonder, more importantly, this never, ever fails to amaze me. I just spent the beginning of the video showing you that the three major indexes all parked right on, had the biggest one-day drop in a long time, and it's the farthest thing from mere coincidence. They all hit and then parked right at key support levels at the close. That's a reaction. The close is a reaction I consider, as well as a bounce or reversal. At the same very time, look, this was one of the better, higher probability targets because it was much better resistance. You see all these levels I'm highlighting here. It was support for a long time here with numerous reactions, dozens of reactions, a lot more reactions than these two previous targets here. So that on a scale 1 to 10, that's a 10 for a target, and we hit it. Now, the $1 million question, I give you additional targets, and then you can also, like last time around, I give you this as a trade idea back in, where was it here? Let me see if I have those still marked up, those targets. Maybe it was on the 2-hour. No, I must have already removed the targets. VIXY, or did I give you another alternative? Either way, it was back here, and we hit the final. We even blew past my final target in that 200 and something % move. But I just wanted to say this, that what I'm trying to say here is these are the current targets, potential targets, And if we get some additional sell signals, and we go through the 200-day moving averages and we start really going down, the VIX has a lot more upside potential, and this could continue to run and could blow past the previous levels that it hit there. Oh, I know what happened, guys. Here it is. It's split 1 for 4. And on this charting platform, it just drives me insane. I do love the platform. I wouldn't be using. I use many different charting platforms, but all your lines, they don't adjust. So you have to replicate the chart and redo them all over. They get lost in Never Land. They go way up or below wherever, if it was a split or reverse split. I think in these guys, yeah, it's a reverse split. There's all my lines. There's my previous targets down there. All right, so it was a reverse split, so they went down low. All right, that's it. So you already had that. That's the update on VIX. Again, VIX parked right on resistance, i.e. a price target. Indexes did to be continued tomorrow. If the indexes break down from those levels, be it tomorrow, be it next week or 3 months from now, then that's when the VIX goes. If the market rallies off the trend lines, the VIX will watch it. Sometimes I'll see the market bounce and the VIX isn't buying it, and that's kind of a tell. So let's just say we do bounce off the trend lines tomorrow. Maybe the futures rally tonight. We gap up tomorrow, hold the support levels on the indexes I showed you, bounce a little bit. Let's see what the VIX does. I will most certainly be updating all this stuff tomorrow. What else do I have for you? All right, let's just cover some of the other sectors that I'm watching. Semis, stocks, that's still these levels I gave you here. It's been taking a while, but we broke down. Remember, we had a sell signal here. We had a divergent high and a bearish engulfing candle after that breakdown and back test there. Most recently, as highlighted numerous times, we took out the primary uptrend line on SOX, the PHLX SOX semiconductor sector ETF. We've been back testing it, and we hit that intersecting downtrend line, dual resistance. So the back test of the uptrend line and rejected off the downtrend line. But as I've been saying for weeks now, we need to take out this level to open the door to some more impulsive selling. That's at 209.55 support right there. It's pretty much contained all the pullbacks recently. So that's what that looks like. We're also below the 200-day moving averages after being rejected off them just again recently, the 200-day simple. And then remember, it's all about NVIDIA. To me, the stock market, the semis, and NVIDIA remains below the primary uptrend line. It had a little bounce today pre-Fed. No coincidence. I laid out back in October. I gave you 3 price targets after we had a sell signals back here. We made a marginal new high, but went on and we hit my 3rd target. Again, that target was given to you back in October and hit that today. Bounced a little, but we're back to it. And again, more importantly, we're below the primary uptrend line on NVIDIA, which to me is very, very significant. That's a very powerful sell signal. What I want to see now, since we're flirting with this horizontal price level, I want to see a break of yesterday's lows in NVIDIA to help seal the deal, if you will, or increase the odds that we're going to go on to hit my long-term price targets. Those are the targets I gave you back in late June. I still maintain those targets, have all along. We hit T1 right here. We bounced as expected. And so if and when that level goes, that should open the door to T2, T3, T4, and that's still my final target, T4 down there, about $40. Might end up, if we get there, covering around T3. I think it's a really good level. It's about $50 and change. That would be from where we're at today, if hit, about a 61% drop in the video. All right. Some of the sectors I highlighted recently, we'll run through. Let's just run through some of the smaller ones first, then I'll go over the top sectors of the S&P, and we'll wrap this video up, and I'll let you guys get on to your evening. ITB gave you a sell signal about a week or two ago on a breakdown here. XHB, the other home builder ETF, followed. What I'm talking about was back then is a break of the primary uptrend line right there, following that big divergent high right there, negative divergence, sell signal, nothing but red sticks, down 11% since the sell signal, and parked right on my 106.43 target. And that's still, whether we bounce tomorrow, if we do bounce, I would look to reshort here around the 200-day moving averages and that 112-ish level for the next leg down. I think that's objective. Semis I already covered. Biotechs I threw out to you months ago. It's been a slow rollover in this one. I gave it to you here. Gosh, where was it? A breakdown of the back test of this big divergent highs there. We went down. We hit my first target, bounced as expected. Rallied back from off this trend line here. We rallied back. Trying to grab a line tool, guys. Hold on. There it is. Hit T1, bounced, got rejected off the trend line, and now we took it out today and closed below it. So that opens the door for a move down to my next targets there, T3, T4, and ultimately T5. I could go on and on. I was going to go over the big fangs. They all look the same. I'm going to rifle through them and then wrap the video up. I said I'd let you go, and I got a lot going on too with the holidays and a lot going on down here. So let me just wrap it up with we'll do the top 10. Apple, big divergent high right here recently. When I say a big divergent high, remember it's been diverging since this point here. This is where the divergence has started. And that's your overall. That shows better on the daily chart. You go out to a daily, you see that big divergent high right there. And so Apple, I still maintain, I gave you targets. We got a sell signal there, had a sell signal, hit my first target, bounced as expected, carried up a little bit, but I still maintain these additional targets here and then some. I think Apple will come down at least to this before all said and done. Why? Because if we get to my fourth target zone, we're going to have taken out the 200 days. That puts on a bear trend, and I'll probably even add additional targets there. Let me go back to the other mag 10, we'll call them. So Apple, and just to let you know, this more recently we had the divergence is steepening here. We have a divergence there, breakdown on a back test and rolling over. In a bare minimum, if you're looking for a near-term target, I think it comes down here at about 237, which will be this uptrend line. That uptrend line comes off the April 5th lows. You got it. Been harping on those uptrend lines, not just QQQ, but many stocks there. And so that's a near-term target for Apple, and then we break that and we go on down to these additional targets. Microsoft, divergent high, simple stuff, right? Divergent high, drop, divergent low, rally, divergent high, drop, divergent low, rally, divergent high, you get it, divergent low, divergent high. There's Microsoft coming off the most recent divergent high. NVIDIA I already covered. Amazon coming off this most recent divergent high here, just like this one here, and that one there, and that one there. Alphabet coming off that divergent high on the 60-minute chart, minimum near-term target right here. They'll probably come in and buy it there or not. Again, let's see what happens. And if they do happen to even take it up higher to a marginal new high anytime soon, if it does that, it'll still be a divergent high. It's not going to change the 60-minute chart technical posture. But with everything else going on, again, watch today's lows on QQQ and SPY and everything else. The Alphabet or any of them, Tesla, they're going to get dragged down kicking and screaming. I don't care. They're overly indexed. And if the NASDAQ 100 falls 10+%, the chances of these guys going up 10 or more percent is near zero, just due to the indexing that they have. Meta, divergent high, breakdown below its previous all-time high right here. We had a breakout here, and that breakout has failed, not by a lot. So again, if we can build on this gain tomorrow, the drop, then that breakout right here, this whole thing is a failed breakout, and that's bearish. It's going to take Meta down here to about 545. Tesla, told you, one of my favorites. Boom. Break minor trend line, boom. Break of the secondary trend line, boom. Kiss that primary trend line I gave you in yesterday's video, as well as I think the day before. And that one comes off October. So once that goes, minimum target right here, 360.45. That's going to represent a drop of about 26%. And I think it can happen a lot faster than most think. There's a lot of hot air in this stock right now. Big divergence. So that's technical. The charts are there. Broadcom kind of fading a lot of the gains so far. Costco already broke down here recently. Broke down back test. Hit my 962.30-ish target today. Breaks that. It's coming down here, which I believe it will. At least to 922. Ultimately, probably get another reaction there. That's why they're different support levels. Work our way down there. And again, this is 60-minute chart, guys. If we do, keep in mind, if we get this, the charts are stacked. So when these 60-minute charts, if they do play out to these near-term targets, that has the potential to start flipping some longer-term trend indicators and taking out longer-term uptrend lines and key moving averages, and then opening the door to much bigger drops. So it's kind of, again, one day at a time, one step at a time, one support level at a time. Netflix, told you I really like this one too. One of my favorites for short. Beautiful uptrend line break there, but it was moving sideways, as I told you recently, including yesterday, I believe. Said it needed to break 904 to get a sell signal, and that's what you got today. So that one's on a sell signal. I gave you in a video the other day, I gave you these targets, 1, 2, 3. I marked that one as T4. Still maintain that, so that's going to be a gain of, if hit, about 16% in Netflix. All right, I'm going to stop it here, wrap the video up, get it out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.